Welcome back to the channel. So I want to share a trade idea with you guys. This is based on a news failure. We saw a stock receive positive news, had an explosion upwards right away, but it's been selling off ever since the cash session opened up. In my opinion, that is showing weakness in the stock, and the stock that I'm talking about here is SERV Robotics. They announced a partnership with GrubHub in the pre-market that GrubHub will be using their robots to help deliver meals in some areas. Those areas are right there. And as we look on the chart here, let me bring it up. There's the pump, okay? So we see a pump occur here in the pre-market, which pretty much, I mean, that pump alone is what, about 10% at its peak. Ever since then, though, it's just been selling down relentlessly. If we look at the daily chart here real quick, this gap down here is actually earnings. It had negative earnings. They guided down considerably. I think they cut down their forecast in sales by like a third. The stock gap down. It's kind of been trading sideways. And then we see today how it starts the day off a little higher. Has nowhere to go. Has nowhere to go. The stock is obviously not healthy too, because short interest 32. So let's talk about that for a second. That is a very high short interest. The fact that this news, which did give it an 8% pop, did not really lead to any cascading squeeze is not a great sign for longs. Obviously, the shorts are digging their heels in. That news did not scare them off. If anything, they probably even shorted even heavier off that news. And normally when you get a squeeze off a news event, it happens right away and it just keeps on punishing the shorts. It doesn't let them out of that position that easily. Rarely do you get a situation with a stock that's very heavily shorted where it pops up like crazy, is hurting the shorts, and then retraces the whole move and then continues on. No, like when there's an actual short squeeze, they don't let the shorts out. The shorts continuously get pummeled. There's no way they'll get them out at cost of what it was before the news came out. So there's likely no short squeeze coming out of this unless there's some follow-up news that's insanely bullish. You know, stock's probably struggling over the fact too that they're just running on very small, what is it? Yeah. It's probably a lot of dilution is constantly hitting the stock. We can actually see all the dilution, all the different outstanding shares that have been pushed out to the market. Normally speaking, when a stock has a high short interest and it trades so cheap, $5, it's normally because there's constant offerings in the market that keep on pushing the stock down. So I will pay attention to that and see what are the chances for more offerings. Is that why the shorts are digging their heels in, because they're expecting another offering? Usually that's the case. And you know, the fact that some positive news hit, stock had a reaction, it's failing off of that. This is telling me, you know what? A short position is not the worst thing here. Now, how you play it matters, because you could blow your account here. On stocks like this, you could pretty much put this in the penny stock category. I would not go short shares because you do have massive gap risk. You never know what that follow-up news could be. And it could be some sort of news that does lead to a massive short squeeze. In some cases, short squeezes on these type of penny stocks can be 30, 40, 50%, which can be super detrimental to your account. So if you are going to play it, give me a second here. I'm trying to bring up... think or swim off on the side here. If you are going to play it, I mean, you got to do it with some options, right? So maybe something like 32 days out, the $18, September 18, 32 days out. Probably should be going for the ones that are in the money at $51. And in this case, I'd probably just go straight up naked puts. That's it. Nothing too fancy. You can't really get too fancy here with the strikes that are available for SERV, but probably just picking up, you know, the $5 strike at 51 cents. Not the worst play. Way better than picking up shares, trying to short shares. That's my opinion. Again, it's selling off on, you'd consider that to be good news. It's just not handling that well today. If we look at just quickly at some option statistics here today. So, you know, we can see that compared to the norm, there's about 4 times more calls being transacted today than normal. The puts is about the same level, but 4 times more calls. So obviously people are trying to play off of this news here. You can see the put call ratio to super slanted to the call side. So you do have likely retail trying to, this is at the market price here, trying to obviously buy calls and trying to chase this move, and it's just not coming to fruition here whatsoever. So probably once this video comes to an, I've got no position, by the way, right now in SERV. So, but likely after I close this video, I will put on the what did I say here, the $5 strikes. That is what I will be putting on position-wise and try to get a play for here. You know, maybe we'll get a quick little move down to $4. Again, the fact that it's not handling this positive news well today doesn't bode well for the longs. If you found this idea helpful, if you want more content such as this one, subscribe, leave me a like if you enjoyed this video, comment for more questions. Other than that, thank you guys so much for watching.